Is volatility here to stay in equity markets? Hello and welcome back to Building a Wealth on the Go. I'm your host, Brad Wilson, portfolio manager with Q Wealth Partners and wealth advisor at KLT Wealth Management. Today is April 23rd, 2026, and we're back with our April podcast, doing a quick 2-minute update on the markets. So we're recording this podcast a little late. There's been a lot going on here for the first quarter and into April. Just going to highlight a little bit about some of the headlines, what we're seeing in the markets over the first 3.5 months this year, and what sort of trends we're watching as we head into and are into quarter 2 of 2026. First big thing being a lot of geopolitical risks. We saw the war in Iran with the United States kick off and Israel, and that sent markets down. You saw the S&P 500 tumble just over 9% down from its peak to its bottom there, but since has recovered with a lot of positive news coming out, mainly just that there is a bit more of an end in sight towards the war. So we have seen the S&P 500 hit all-time highs as recent as yesterday in the market. So we have seen that quick rebound, but the volatility really is here on a regular basis. Day to day, we are seeing those swings. One of the big themes we are watching as well is a rotation out of large tech. Large tech has driven a lot of US markets over the last 3 years, and a lot of those big mega cap names. We've seen the emergence of more ex-US companies surging and doing well. Look at Canada, look internationally, some emerging markets as well. And also smaller and mid-cap companies, especially in the US as well, have been sort of forgotten and lost behind over the last three years. And we're seeing a little bit more of resurgence and outperformance in that area of the markets as well. In Canada, the TSX was down just over 9% as well from its high, and is outperforming the S&P 500 year to date as well. There's a big segment of gold in the S&P 500 still, and gold has seen a pullback this year. There have been some drivers of that. Usually during war periods, gold performs well. With the recent rally, there's been some institutional and government sell-offs in gold, especially over in Asia. And so that's been a bit of an offset there on the gold spectrum, which has reduced the price there. But still with that, the Canadian market overall is doing well this year and has rebounded. So that brings in just one theme I want to touch on quickly here before we wrap up this podcast is volatility. Is volatility here to stay? Is volatility the new norm? And I think one of the biggest important things is you don't want to be out here trying to time the market. Your time in the market exceeds timing the market over a long period of time. We often see, especially now where information is so readily available at our fingertips with social media and just the quick announcements that can go out, you can see markets shift on a minute basis nowadays. And if you are missing out on that usually that 1 or 2 days, those best days, which often follow the worst days, you will significantly underperform over the long run. And we're going to continue to monitor these going forward. We'll do a bit more of a deep dive into the economy and how that's sort of impacting things on the next episode in May. So you'll see that in a few weeks from now. But hope this has been somewhat informative for you over the last few minutes here. And we'll do a little bit more of a deep dive halfway through the year in the summertime. So thanks as always for watching, and we will see everyone again soon.